This is the Friday, August 2nd, 2019 version of the Market Plus segment. Joining us once again is Darin Newsom. Darin, I'm going to start it off here with a question I know you're going to love to answer. I'm sure you already know what it's about. It is from Craig in Adams, Minnesota, but it's still what a lot of people are asking, even Darin Newsom. He said, how will the market react on August 12th with revised acreage planting numbers?
Number one, no idea. Nobody knows. Nobody knows how the market's going to react because nobody knows what the revisions are going to be. The USDA and all of its branches, from the WASDE to NASS to ERS to even FSA, they all have different information. And this week, USDA came out and said they will revise if the numbers that they collect from some of these other agencies are different enough from what they had before to make a change necessary. That's an if. But again, we have all these different data sets floating out there, some collected by survey, some actually done by paperwork, some this, the broken process as it is. So we have no idea how they're going to revise, if they're going to revise. If they do revise, people aren't going to be happy because they're going to say it's not a correct revision. If they don't revise, people are going to come unglued and say they had to revise. I have no idea how they're going to react. It's the stupidest thing in the world. But this is the process that we tie ourselves to. And this is what everyone seems to want.
So what is Darin Newsom watching if he's not obviously watching the USDA reports?
SpongeBob. I'll be watching SpongeBob that way. No, for fundamentals, as we talked about in the show, my idea isn't going to change about fundamentals by what numbers USDA makes up in this month's report. I'm going to be looking at the spreads. I know what the spreads are doing going into the report. I know how they change as the weather forecasts change. That's what I'm going to be watching. That's what I've always watched. Suits me just fine.
Okay, well, we've got a good question here from our friend Phil in Ontario, Canada, talking just about the spreads. He's got a good one here. He said, what are corn and soybean futures spreads telling us? Or should I just look at weather derivatives? There has to be a butterfly fluttering around somewhere.
Phil is a good friend of mine, and he's actually referencing a couple of different things that I've written. Number one, always about spreads. And we have seen the spreads, as we talked about in the show, both new crop spreads for soybeans and corn trending down. In other words, the carry's getting stronger. But it's neutral. It's moved into a neutral position in soybeans. And it's still bullish in corn. I don't think that's going to change. I think soybeans could get more bearish. As far as the weather derivatives, it's long been my belief that futures, particularly grain futures, are nothing more than weather derivatives. The underlying driver of what we see happening in the grain markets is not USDA. It's weather. Everything's dependent on the weather. No matter what happens in the grain markets, it has to do with weather. So they're nothing more than weather derivatives. So right now, the focus, all the chatter and all this and that and everything else on about August 12th. What's the acres going to be? What's this? Nobody knows. Nobody's going to know. We won't know for a long time. But we can see what the weather forecasts are. And if those change dramatically, the markets are going to change as well.
How much do weather derivatives matter with some of the technology that we have in place with drought resistant, with...
That's a great question, Delaney, because if we come through this year and corn does well, what does that say about the seed? What does that say about the billions of dollars pushed into this seed? That is what I'm waiting to see. The ghoulish part of me would actually like to see national average yield in January come in 170, 171, whatever it might be, show that this crop actually did well. And it still could, because if you don't count the acres that were drowned out, maybe the rest of the crop's pretty good. Who knows? But just to see if the seed technology has come along that far to survive the type of year that we've seen this year, where everything has been thrown at the crop.
And if it comes in at 170 or whatever number higher than what people expect, does that mean that weather derivatives no longer apply to the markets?
I think corn then becomes very similar to wheat in that it's going to have to be proven to be dead before people actually start to buy. And I think it's going to make weather markets that much more difficult to create in the years to come.
Okay, interesting. Looking long term there. Darin, since we're talking about these factors, another one that you obviously follow very closely is supply and demand. We've talked about it a little bit on the show, but we've got a good question here from John in Adel, Iowa. He said, what supply and demand numbers is the market trading?
It's another great question because I don't look at supply and demand numbers at all because, again, There's no way of knowing what they are. What is the market trading? Who knows? Because right now we're dealing with an old crop ending stocks roughly, in corn, roughly around 2.4 billion bushels, which is burdensome, to say the least. Soybeans, 1.2 billion bushels, which probably should have soybeans down around $4 or $5 per bushel. But the market's not looking at those numbers. And there's absolutely no way, impossible to tell what new crop supply and demand is going to be, because we don't know acres, we don't know yield, we don't know what production is going to be, we don't know what beginning stocks are going to be, and given the trade wars and all the broken trade agreements that we have going on out there, we have no idea what demand is. So without knowing what supply and demand is, it's really hard to pinpoint what ending stocks are. So I don't look at the numbers. I'm not worried about the numbers. I have no idea what the market's looking at right now. All I know is corn, long-term fundamentals are still bullish, at least according to the commercial side. Soybeans, not so much.
Okay, so since you're saying that about corn still being long-term bullish, we've got a good question here from a gentleman in Audubon, Iowa, Jerry in Audubon, Iowa, asking about what we should do strategy-wise. He said, if I have sold new crop corn into the rally, what futures month should I buy calls on to protect an upside move?
With this August hullabaloo coming around, people might want to look at some very short-term options. They could look at some short-dated September options, some short-dated new crop Septembers. I've been talking to some people, do some straddles, buy some puts and calls on both sides. But if you've already got the short side covered, you might be able to look at some September short-dated new crop options. You wouldn't necessarily have to go all the way out to December. If you wanted to go all the way out to December, which would expire in November, if the long-term trend still wants to try to go higher, those will pay off. So I think you're relatively open on what type of options. You are seeing volatility coming down, so you can afford to buy more time value. Depends on how you want to play this thing. You just want to play the report, look at the short-dated new crop. If you're actually covering through what could be a delayed harvest, you might want to go ahead and do the full December option.
Okay, when we look at commercial carry and what's going on that side of things, we've got a question here from David in Eastern Iowa. He said the Chicago Board of Trade is changing storage premiums on December 19. Will this affect your analysis when looking at percentage of full commercial carry?
This is a fantastic question. This is absolutely fantastic question. I'm so glad David sent this in. It has to. I mean, the part of me that looks at the forward curve in soybeans and sees a 40-some cent, 49, almost 50 cent carry between the November contract and the July contract screams, the old merchandiser in me says, it screams that this is bearish. We've got almost a 20-cent carry in the December corn to July corn spread. Again, that should be bearish. But because we're changing the official storage rates from 5 cents per bushel per month to 8 cents per bushel per month, the percent of full commercial carry that's being covered now isn't bearish.
Why?
So because using the corn number, I consider anything bearish, anything 67% of full commercial carry or greater. Using this rate, this 8 cents per bushel per rate, we're only at like 23, 24. We may be closer now to, I think we're closer to 29% full commercial carry. So that's still in the bullish category because it's less than 33%. On the soybeans, we've moved into like a 51, 52% of full commercial carry, which is neutral. In the old, we would be above 70%. So it does change the way I look at it. I can either look at it from the percent of full commercial carry, which gives me one reading, or just look at it from the sheer fact that we've almost got a 50-cent carry in the new crop beans and 20-some cents in corn, which just makes you shake your head and say, there's still plenty of corn around.
There is. There's still plenty of corn around, according to Darin Newsom. Okay, we've got a couple more, I'm going to call them softball questions for you, Darin, because they're kind of big picture ones here. Starting off here with Glenn in Bryan, Ohio, looking at some of the MFP payments, which we won't get into the politics of that. He says, did the detailed announcement of the specific MFP 2.0 payment rates through the Midwest have an impact on basis bids that are now based on questionable estimated planted acres disclosed by multiple government reporting agencies? It sounds like you guys have been chatting there.
Yeah, Glenn and I talk a lot. That is quite a question. Did MFP payments affect basis? I think it really could because, most likely it it changed. I don't know that it changed the old crop basis strength that we're continuing to see. That's a different issue by itself. But possibly as we get off into the new crop market, I think we are going to see that, because maybe, folks went ahead and planted to get their MFP payments rather than taking prevent plant. So in order to get the MFP payments, they had to go ahead and plant something. So that means there's going to be something in that area, and if there's something, that means more bushels, and that could affect basis. So I think in the long run, yes, it is going to play a role in the basis market.
Sounds like negatively too, is what you're insinuating.
I think it could, yes, but we've seen extraordinarily strong basis here over the last number of months. How long can that continue? And if this game of holding back much of 2018 and carrying it into 2019, where we're deficit these crops, that's going to change the basis markets as well, and that could certainly offset anything that we see from the MFP payments.
Okay, Darin, we've got one final question. I saved, I think, one of the best questions for last. We've got Ben in Jessup, Iowa. He said, bear with me on this one. He said,
okay,
if you were given $100,000 in a margin account, and you were charged with trading it for a profit in the next 90 days, the rules being you have to place one corn, one soy, and one wheat trade, how would you position yourself? Long, short, futures options, and what month and strike? And you may also use a portion of your capital. You may also apportion your capital.
Okay. Number one, I'm willing to take someone's $100,000 if they're willing to do that. That'd be great. I'd be very happy to do that. But let's take the three major markets. I would probably be buying corn. Like I said, I'm still bullish long-term fundamentals in the corn. I would look for a rally like we talked about in the show in the wheat market to most likely sell wheat. I guess it's just part of me cannot be bullish wheat for whatever reason. And in the soybean market, because I don't see anything bullish fundamentally, because I think that if the weather does turn, we could see a bump in the market, I'd probably be looking at selling some calls. If volatility jumps up one last time this summer, we get a little bit of a late season and so on, I'd probably be looking at selling some calls. Now, portioning it, I'd probably be 78% long the corn market. Probably a good 10-15%. I'd look to be selling calls against the soybeans, and then because suicide is painless, I would probably leave it at about 5%. I'd trade wheat any day. I would never put a whole lot of money into the wheat market.
Oh, that was quite the answer.
Yeah, I've done that too many times in the past.
All right, Darin Newsom, thank you so much. Always a pleasure.
Thank you, Delaney.
Join us again next week when we explore a farmer's market that gets to set up in the Library of Congress. And John Roach will join us at the Market to Market table. Until then, thanks for watching, listening, or reading. I'm Delaney Howell. Have a great week.